Hi there, welcome back to First Trades. Let's interact with the management of Akzo Nobel. It's the thick of earnings season. We're heading into the last leg of it. And Akzo Nobel, we have Mr. Rajiv Rajgopal, the Managing Director at Akzo Nobel, joining us on the show. Mr. Rajiv, hi, morning, and thanks for your time. Let's talk about your earnings. In the quarter gone by, your volumes were up, but your revenues have seen a little bit of a dip in the quarter. If you could help us understand what's driving this pricing correction and how long do you expect this pressure to continue?
Good morning, Sneha. Good morning to you and all the ET Now viewers. First and foremost, you're absolutely right. So volume grew 3%. I think for us, that's a huge positive, primarily because when you say revenue declined by 1.5% on a like-to-like, if you've got to exclude the carved out part of the business, then if you look at our premium grew mid-single digit. And I think that's a huge positive because it's after a few quarters that we've seen it. And there were certain stimulants given to do that. Where we've not got volume growth in decorative has been in our mid economy, and obviously we've not started our participation in the construction chemicals business, and we are a very low player in the putty business. So those are the places where the growth has come for the industry. And in terms of how I see it, I think what we are doing now is in the last quarter, if you look at the 1.5% and 3%, our volume grew, as I mentioned. Our mix was on hold. So unlike the industry, which has seen a negative mix, what we've seen is we've taken some price corrections. In Dulux, many of our brands were at significant premiums to the market, e.g. between 5 to 7%, and we are correcting that a bit to drive further growth. So strategically, what are we doing? We are making sure that we are now going to be available across price points, across segments, markets, and we are making sure that we are right price for both our customer, which is a painter or contractor, and consumers to buy. On the coating side, the blip is largely because of a large huge order, and I mentioned even last year this time when we got it from on a marine business, largely from the Indian Navy. Our order book is strong, so I'm not too concerned that between the current quarter and the next quarter we will make up and we will get back to high single-digit stroke double-digit growth because order book is a reflective of what is there.
Okay, what should one make going forward into H2, sir? Hi, this is Harsha. What should one make of the growth that you're anticipating in H2? Is it going to be structurally stronger, given everything that we've now put behind, if I can call it that?
Yeah, so I think let me sort of explain it this way. So we were declining in volumes. We've now gone to 3% in the last quarter. Our endeavor is to move to mid-single digit and eventually to high single digit, if not double digit, by the fourth quarter, the last quarter of the fiscal, right? That will give you a reflection of how we are planning it. On revenue, it will lag a bit because, as I mentioned to you, the price part will vary out. In terms of EBIT margins, we are clear. Look, we are currently at about 13.3 if you sort of normalize it. Our endeavors that we will play in the band of 14 to 16 eventually. But clearly, I want to be very clear that our focus is to drive market share. The market in paints is hyper competitive, and we are going to do what it takes to defend and grow our market share.
Right. And Mr. Raji, you also gave us a sense of the quarter gone by. We've had the festive season come in early, and that usually leads to a boost for home redecoration and paints particularly. On the flip side, we've also seen an extended monsoon this time around. Give us a sense of how each of these factors have played and which one has outweighed the other this time.
So look, I think from our perspective, we've seen large towns do a little better, which is why our premium growths are fairly strong. We are pretty strong in those markets. And largely, if you look at our exterior portfolio has started coming back in markets where the rain was not so heavy. But you're right. I think it's a function of different markets performing differently. For us, in the quarter gone by, we've seen stronger performances in a couple of our regions, particularly North and some markets in West. And hence, and we've seen October's even slightly more different because we've seen again, different markets perform differently. So yes, the festive demand, my view, is latent. I think that because of the extended monsoons and because of rains in many parts extending till almost end of October, even early November, I think the coming months should be pretty strong. Of course, December last week, obviously the extreme winters would be a curse, but I don't think structurally there is any issue. I think, also remember that paints, our GST corrections were not there because we already had 18% and there was no correction. So if you look at it, I think, for the items which are higher GST, e.g. Cement, etc., you've seen good performances. So paint will follow with a bit of a lag.
Okay, Mr. Rajiv, that sounds really good, and good to have you with us, and wishing you the best of luck for the quarters to come. Due to paucity of time, we've had to cut this interaction slightly short, but we hope to chat with you once again very soon. Thanks so much.
Thank you both. Thank you.
Thank you. Okay, viewers, on that note, it's a wrap on this edition of